I just wanted to very quickly also highlight another issue. I know a lot of the businesses talk about interest rates, and the interest rates have not come down. I know there was a 0.5 reduction by a number of the banks as far as interest rates were concerned, but also in respect of the money supply. As you know that, as I mentioned to you earlier on, by bringing in foreign debt, you're actually adding to the money supply, and of course, you're increasing liquidity within the system, and that should be able to, bring down interest rates in the short to medium term. There's also some of you may know, some of you may also have also invested, last year in term deposits. As you know, term deposit rates, there's a bit of price war going on between the different banks. And so a lot of those term deposits are now coming off the keel. So when you have higher interest rates for term deposits, obviously it'll increase the cost of interest for when you lend. But if that comes off, then obviously the interest rates will come down. But government plays a very pivotal role, and I just wanted Shiri, where's Shiri? Shiri, sorry. If Shiri can just sort of talk about what we are doing with the banks. Shiri deals a lot in respect of that with the banks, where, for example, we are parking our deposits, how we are dealing with FNPF, the position of FNPF in terms of the money markets. Those are the types of issues I'll get Shiri to talk about. But one other plug I want to make for you is that you may have heard in the announcement that we are now also allowing for corporate bonds. So you as a company can actually list corporate bonds on the South Pacific Stock Exchange. I just had a discussion with one particular company that has a lot of credibility, and they are looking at that. So that's an alternative form for you to be able to raise capital other than through the banks. So essentially you have corporate bonds, it's listed through the South Pacific Stock Exchange, and you're able to then access those funds, and of course you pay interest on that, and that's how the people who buy your bonds make money. But what we have said is essentially income tax exempt. So even people who are actually making money by buying your bonds and getting the interest on it, even that interest earned is actually income tax exempt. So that's some of the incentives, and I urge you to look at that, because quite a few incentives have been put in place. You can even put a corporate bond together as a conglomerate. A couple of business houses actually can come together and list a corporate bond issue in the South Pacific Stock Exchange. Think about that, because a number of opportunities, and I think a lot of people have actually not thought about it quite thoroughly, and the depth at which we have looked at to be able to unlock the sort of financial capacity within the system. I had a discussion. We used to have our own National Bank of Fiji, which of course we lost in the 80s. The reality of the matter in Fiji is that we have only 100% Fijian-owned bank, which has got a very small share of the market. The big boys are ANZs, your Westpacs, then of course to a lesser extent your BSPs, your Bank of Baroda, your Bread Bank. All the head offices are outside Fiji. All of them. Ultimately, the decisions about their fundamental policies are made by the capital cities from which they come from, or the financial cities they come from. If we had our national bank with a fairly substantial share of the market, it can then actually have a fairly influential impact in respect of the direction in the financial system within the country. The one institution that has a large impact on the financial system, because it has enormous large reserves of money, is Fiji National Provident Fund. It has about 38%, 36% of essentially all the cash. So, you need to be able to understand what's happening within the market, but also take the opportunities. I'll get Shiri now to just mention a couple of things that we've been doing. You have the mic for him, please?
Thank you very much. As Honorable AG mentioned, if you look at the budget, I think one of the key dimensions of the budget is that there's number of policies in the budget which is trying to position Fiji, once the borders open up, to be able to rebound quickly and have a V-shaped economic recovery. So similarly, I think one of the key aspects behind government increasing foreign borrowings has been with a mindset to be able to bring down interest rates in Fiji. which will play a crucial role once things normalizes, once the credit risk for businesses come down, to be able to rebound, businesses being able to take loans, and for more investments to take place. So there's been a number of things that has been done in the background, I think, which is not catching public attention because this is done at technical level with the banks and FNPF. So we are, for example, as in the last budget and also this budget, there's a round of US $600 million into Fiji from external partners, reputable partners like ADB, the World Bank, the IIB, IMF, JICA and others. So this is going to increase the liquidity in the system. As of yesterday, we brought in US $100 million that was parked in our offshore account. And if you look at the foreign reserves numbers as of yesterday, we have $2.3 billion in foreign exchange. And as of yesterday, the liquidity levels have also risen, increased to 951, close to $1 billion. So this is being proactive, and we all know, I mean, as the banks have spoken out, given that there's an element of credit risk because businesses are suffering because of the closure of borders, but eventually this would normalize, and once the element of credit risk comes down, and as the cost of borrowing, the cost of funds for banks have come down, we will eventually see interest rates come down. And for example, it has already started, government as a risk-free borrower, we have already seen our interest cost coming down substantially. For example, 20-year borrowings by government, we have 2 years ago, that rate used to sit at around 8%. Last 12 months came down to 7%. At the moment, as of last financial year, it's sitting at 6.4. And it's going to even come down below 5. So as a risk-free borrower, our rates are coming down. And for the business sector, once this element of credit risk goes away, there's no doubts that interest rates will have to come down because there's huge liquidity being built up in the system. And we have been having constant discussions with the commercial banks, FNPF, and at the start there was some uncertainty whether this liquidity and foreign reserve situation, given that the foreign exchange inflows are not going into Fiji, whether this is sustainable. And I think the banks and the financial institutions has clearly admitted, and I think because this has been very credible, this high liquidity situation which is created by government, supported by other financial institutions, will remain for some time. And it has also, I think, killed the, when we had the COVID crisis, there was some speculations around social media on devaluation. And I think after that, with the sustainable position of foreign exchange reserves, that rumor has gone away, and I think Reserve Bank has also come back very strongly on that. And that rumor in regards to the devaluation is completely gone, which is giving more certainty to the private sector because of the stability that is being maintained. And in terms of our borrowings, there were some discussions around why government is increasing its borrowing, because at the moment, as you all private sector would know, the private sector investors, it's challenging times at the moment. So government at this point, through its fiscal policy, has come on board, even though it means a little bit higher borrowings in terms of increasing government debt, but this will give us a faster economic recovery. If we had taken an austerity budget this time, cutting expenditures as proposed by certain segments, it would have made our recovery much worse, and it would take 5, 6, 7 years to recover. But what we have seen in the budget, if you look at the numbers carefully, it's positioning Fiji to be able to rebound very quickly. Thank you very much.
Very well said, Shiri.